Hard work, the most raw and obvious way to reach something. Maxime Lagacé. My friends, we ask you to put in hard work, 10 to 15 minutes each and every market day, reviewing the charts, following your favorite stocks and ETFs. Practice trading as often as possible and keeping notes on what you learned, why you did what you did, and then after the fact, going back over it, Monday morning quarterbacking what you could have done better. Follow what we teach here. It is simple. It is effective. You will prove it to yourself, and it won't cost you anything but 10 to 15 minutes of your time. Let's jump into these charts. We see stocks and Bitcoin up. We see bonds and gold down. As we always do, let's jump into the S&P 500. We, of course, had that successful trade a couple of weeks ago. After that, things went up, slid sideways and down, and over the last day and a half, we see them popping up again. We're still below the 200 EMA. We're waiting for things to rotate over on the STC and head down. Now, what did today's movement do with our 2-day chart? Look at that. It just turned green. Now, does that keep us from jumping into a down move on the half-day chart? No, it doesn't, but it gives us a little bit of a warning sign. We can see we've got 3 green up candles when it comes to the 2-day chart, so be aware of that. Look at how the week has started off with such a strong up chart. We can see where the S&P 500 just doesn't want to push through this 200 EMA, does it? Now, is it going to do so at some point? It might. That will portend very, very poorly for the market moving ahead, but we will keep an eye on things. The way we are positioned right now, we are at a negative 10 right now. That means that our STC is negative only on the weekly chart, and this is, of course, our success multiplier formula. It is green on the 2-day and on the half-day. We're still below the 200 EMA on the half-day chart, and we're below the 200 EMA on the 2-day chart. So if we have a rotation over, we will be aware that the 2-day chart is not going with us, but the weekly and the half-day are. When I say rotation over, I'm talking about the STC. That's our indicator at the bottom of the page, going from green to red, as it did before when we had that nice trade, as it did previously too when we had that nice trade. So we'll keep an eye on things and see how they are going. Let's see how much of a ditto it is. When we look at the NASDAQ 100, we can see where after we jumped in, well, actually out of our successful trade, down 4.76% on lots of volatility on that Thursday morning, back on the 13th. Things after that pretty much went up, slid sideways, and again, like the S&P for the last day and a half, moving up. Now, we look, where are we on the 2-day chart? Was there enough energy? See, not. One reason, we'll talk about that when we get to the weekly, is because of the position of all of the down moves and the effects that they have had in the NASDAQ 100 versus the S&P 500. S&P hasn't been down as much as the NASDAQ. So if there's a lot of up move tomorrow, you could see this switch over, but it is more poised for a down move than the S&P. Also, check this out. See, we are still below the 200 EMA on the weekly. Weekly, of course, is still down, so we're at a negative 14. That's 4 points from the 2-day chart that is still negative, and 10 points from the weekly chart. You might say, where do these points come from? Well, we give 1 point to the half-day chart. How big is the 2-day? It's 4 times the half-day, right? How big is the weekly? It's 10 times the half-day. There's 5 days in a trading week. There's 2 half-days in a day, so that's 10. That's how we put our success multiplier formula to work for us. It shows us in one raw number what the power of the current move is and what we're looking for. So if we see things rotate over on the half-day chart on the NASDAQ 100, it's going to be a more powerful down move, and would be much more willing and likely to jump into a down move on the NASDAQ 100 versus the S&P 500. That should make common sense to you. And we do see, if we look back, we can see as things have moved up, we might have a little bit of a ceiling here. who knows if things do keep going up. So we'll keep an eye on things, see how the week develops. Now let's jump out of stocks to bonds. Bonds are down for the day 0.83%. And again, are things slowing down in the down movement in bonds? Hard to tell. Did the same kind of thing on Friday. We will see. Bonds are well below the 200 EMA on the weekly as well as the 2-day, as well as this half-day chart. Red on the STC on the 2-day chart. Look at that huge down 2-day candle. Again, it completed today. It started on Friday. We look at where we are, and the STC, of course, is negative, and the weekly, quite negative too. Check this out. As I pull this in, I have to actually pull it down for you. Look how far below. This is the weekly chart. We are into negative territory when it comes to 20-year bonds. So much killer down movement. Hoping for things to reset to give us an opportunity to be able to jump into another down move. This one was successful. We look back, we can see how our other moves have been successful for us. So we'd like to see that reset. If it does, it gives us the ability to pull the trigger again. If it doesn't, we take what we can get. We be happy with it. We don't want to go against our rules. You go against the rules, you typically have problems. And there's plenty of things to trade. You don't have to push it on trades. Again, follow the rules. You will see over and over again how and why they work for you. Let's move from bonds to gold. Gold down 0.32%. Had a nice trade in gold that closed this last week on Wednesday morning, down 2.34%. Gold has gone back to the green, just now clearing this center area. Has to clear that before we would consider jumping back into a down move when the STC switches over from green to red, as it did with that last opportunity. We'll keep an eye on gold, see which way it's going. Look at where we are on the 2-day. It just turned red this last week. It had been up during most of our down move, although it did rotate over for us to clear that successfully. So we do see that is going with us on the success multiplier formula, as well as the weekly chart. So that is actually 10. We have 10 points there, 4 points with the 2-day chart. We're just waiting for the half-day chart to rotate over for us. Also, something else to note, we're nicely below the 200 EMA even on that weekly chart, which sets us up nicely for potential short position if it occurs again. Where are we on Bitcoin? Bitcoin up a little bit for the day, 0.76% again. We're in the green here, but that doesn't mean a lot with all this sideways sliding. Just sort of not breaking out, not doing much of anything except just sort of, sliding along, not giving us much to go. We are, of course, below the 200 EMA on that half-day chart. We look at the 2-day chart again. We're right around that 1820 or so mark. Particularly, we can see that on the weekly chart. And what are we waiting for? Waiting to see Bitcoin just build a good solid base and then take off moving up and give us a chance to fire the trigger in some up moves. Right now, Bitcoin too dangerous, too hot to do, and not trending in any way to give us any kind of trend that we could jump into and feel any ability to succeed. That is where we are on Monday. Again, waiting for some short positions to potentially set up for us. Well, they appear to be setting up, waiting for the trigger to be fired so we can jump in them again on some more successful practice trades. My friends, we love to hear from you. cw@chartingwealth.com. Don't hesitate to reach out to us with your questions, problems, concerns anytime. Happy to answer them. God bless. All the best from the whole team at Charting Wealth World Headquarters.